Hi, I'm Sam Meredith, and joining me today to discuss the second largest economy in Southeast Asia is Chief Economist with Forecast, Chester Liaw. So Chester, Thailand posted a trade deficit of just over $520 million from today's data, which shows somewhat of a drop in exports. Is this reflective for the overall economic health of the country at this moment, and to what extent is this likely to impact on production?
Okay, first of all, right, it's not really that sharp a drop. In fact, it's the most shallow drop this year. And versus market expectations for about 3.3%, right, it's actually better than expected. But with regards to whether this is reflective of the overall health of the economy, right, I would say that, yes, it is, because it has been negative thus far this year. And if you look across the spectrum of indicators, right, you can actually see that consumer confidence is falling. Headline inflation, is in deflation thus far. Exports are negative also, like for 4 months thus far, and the BOT has cut rates twice. So, if you look at the overall picture, it's definitely not a healthy picture. In fact, right, the growth forecast, the GDP forecast is cut every month. So, it shows that the authorities are not confident of growth figures as well. And if I may continue, right, export projection was also cut recently to 0.2%, but I think it will only be a matter of time before the official projection is negative.
The Bank of Thailand recently cut its interest rates in an attempt to boost economic growth. But 1 year on, after the army seized power, what can we expect from Thailand moving forwards?
The thing about it is that for the Bank of Thailand, right, they actually cut rates in April, but that in April and May. But the first cut, right, was actually was because they were behind the curve. So they are actually trying to catch up with other Asian central banks by cutting rates. But the latest rate cut, right, they are actually trying to be ahead of the curve instead of behind the curve as they were last time. So their latest move it actually shows that the authorities are actually very proactive in trying to counter weakness in the economy, and we can similarly expect them to be similarly proactive going forward. But how much help and support will that give to the economy, right, remains to be seen.
Lastly for today, which key indicators will you be looking out for in the short term for the Southeast Asia economies? Are there any potential surprises for us to keep our eyes on?
Data-wise, right, there's only Philippines GDP this Thursday, but I think what you're asking for is whether there's anything that's going to be market moving. With regard to that, I don't think so. We have seen a spate of surprise cuts and surprise central bank meetings over the past 1 or 2 months. So, in fact, past few months actually. So, it is very unlikely that that will happen again. Yeah, because most of the central banks, right, are now quite comfortable with their lending rates. We do not foresee any surprise cuts or surprise central bank meetings for the next quarter at least.
Thank you, Chester. Check back with Dukascopy for more updates throughout the week. Goodbye for now.